Okay, so like recently I got to know this. I mean, I always knew the Degiro, but I got to know that it's also traded publicly, and there was a quick opportunity presented, so I thought I popped on it. Of course, before going into it's not an investment advice or something. It's only for presented for sharing my views, and don't take this as a investment advice. Please do your own due diligence. Also, like I do have a position which actually already ran up 30%. So whatever the idea that I present now was what I was thinking when it was down 30%, when it was down to that levels. So please take it with a pinch of salt. Actually, flat text is actually emerged from an English term, flat execution. So they are one of the first brokers to some extent. They offered a flat fee on execution, meaning that it's independent of the volume. Like you trade with 100 shares or 1,000 shares, you only pay a flat fee, and that's why it's called flat X. It's actually founded in 1999, and they started offering brokering services 2006, and they came up with the IPO in 2009. In 2015, they took over XCOM, which is an IT and a banking service company. It was a fintech company. So that actually the takeover also gave them the banking license. So they are a broker and a banking license. The Degiro actually is actually from Netherlands. It was founded in 2008, and they started offering broker services in 2013. In 2019, around 2020, actually the Flattex acquired Degiro, and they became the largest retail broker in Europe. And then from that time onwards, they started calling Flattex Degiro. So the business segments are like three mainly. As you can imagine, it's not very difficult to understand. They get money from their online brokerage, and they have three platforms. So Flattex, which is mainly offered in or mainly popular in Germany, Degiro in Netherlands. They also have Bitrate. And then the second contribution is actually from the treasury. So as I already told you, they have a banking license, which actually gives a different perspective because the bank acts as a custody. So the clients actually put the money in the bank, and then they use it in the brokerage, which means that whatever the money that you put in, they can invest and earn interest. Of course, you have to give the permission. There are two kinds of accounts, and that gives them a little bit extra leverage that they can offer, which I come to it later. And the total asset under management is about 2.8 billion cash right now, as of September 2022. And then like they also have, when they took over XCOM, so they also came up with a little bit of an IT service, which they provide. Doesn't contribute much, so I will not discuss much about this, but they contribute about 8% to the revenue. So what really caught my eye was like, I mean, Flattech itself was growing until 2019, but after they took over, if you look at the number of transactions executed, it's exploded. Of course, we should also take into account that it was cyclical high because there was a lockdown and everybody was at home. So obviously, they could get more number of people into trading, as it's nothing special with the Degiro, but it's true for any broker, as one could already imagine. And they also could get the users to trade more in a way that it's also true, nothing specific to Degiro. Also, the assets under custody, AUC, also has grown steadily. This business effect has also been reflected in the case of revenues as well as the profits. The only one thing you can see is that like they also grew in number of employees, which is understandable, and they kept it completely debt-free, which was interesting. And coming to this capital the business needed, so out of the total assets under custody, 93% actually are securities, and which for them they earn commissions. It's about 96 base points is the margin for that. The rest 7%, which is 2.8 billion, they do some liquid portfolio, which means that they also give kind of invest in bonds and stuff, and then they have credit portfolio, in which some of them is provided for margin lending for their own customers, and some of them is actually into the alternative investments. So the margin lending is what is that, like, say if you're a customer of Degiro, what you do, or a flat tech, what you do is that you kind of provide your portfolio as a collateral and get margin. So the highest margin possible offered is 50% of your collateral. And then right now the group level, they're at 30% of the margin lending. I mean, this shouldn't be very difficult for us, especially Indians, because the same story that we speak in India, it's true also for Europeans, meaning that the company kind of splits them into two different markets. One is the underdeveloped, other is developed. For example, if you look at this developed markets, 86% of them already use online brokers. 35%, I'm sorry. And then if you look at the underdeveloped markets, they only use 8% of them use the online brokers. All others still kind of use only the traditional banking methods. So they actually see that they can either grow because there is a new people coming into the market. That's one way. The other way is that they can take market share from other people. The third way is that they expect the people to change from normal classical banking solutions into a fully online broking. And of course, they did marketing well and they could grow much better than other brokers. Nordnet is actually a very popular broker in Scandinavian countries, and we can look at other. Swissquote is also there. Coming, of course, any company is only good as the management is. So as you can see, most of the people who are there, especially the CEOs and the CEO as well as the CFO, they are with the company for a long time now, about 8 years. And if you look at what they delivered last 8 years, you can see that they have the skin in the game, and they also do know their job pretty well. So of course, we need to see what the remunerations are. I compared it with the same thing in the sector, and remunerations are not higher. So they have two parts. One is the fixed compensation, other is the variable compensation. The fixed compensation is really bodes well with what's paid across the sector. Actually, it's slightly cheaper. Variable compensation split into many components, which is very achievable. For example, like if you increase the turnover, or if you increase the margin, or or if you increase the number of customers and things like that, which is in a way good, because they have to work. If they work hard, they could achieve the result, they could get more remuneration. Okay, how I got to know this company, or this is normally asked because we know most about Indian companies, we don't know much about European. That's my assumption. Is that the stock dropped 40% in one day? That's why I kind of caught my attention, because it was in the news. And then I looked at the market cap. It was back to 2018 or 19 market cap. Given the growth that I have seen already, this looked like a good bargain to buy. So, and then why it dropped is because BaFin, which is like a regulator for Germany, audited them in, say, starting November or so. Okay, the real background is that so they grew so fast from 2019 to 2022. Their revenue went 3x, and their profitability went 3x. The number of customers grew 3x and stuff like that. So they were classified as a simple, non-complex company, and now they will be they will not be in that classification anymore. They'll be given even I think it's with W, which means that they are not simple anymore. They are complicated. Number one. Number two is that they used to provide all these margin-based services in which they were assigning something like a risk-weighted capital. So they weren't assigning any risk to those margin accounts because they had a collateral, but now they have to provide a risk assessment to them as well, which means that they kind of got 300 to 400 million euros additional risk-weighted assets in their balance sheet, which means they have to provide 3% of that value as a kind of a regulatory capital. Okay, and then this was the answer given by the company. I also went through the con calls, and then they say that they already have 180 million in cash, it's company cash, and then see that they will also put in what they earn in 2022. That means they have no need for any external capital or borrowing. Remember, this is a zero debt company. And then the other thing which could become a problem is that the BaFin asked them to have more documents, which means that they need to have more back office stuff. That means the salary will go higher by, say, 8-9% next year. And then they actually assume or kind of promise that by 2023, the extra capital that they have to pledge for the weighted asset requirement will go away, and they will have the cash back, this extra 50 million euros that they back. And then by 2024, they expect it to be completely compliant. So what I expect going forward is that growth will certainly taper. It's not only for Flatex, it's true for all across the board. As we know, COVID peak plus when the market goes down, it always takes some time for the enthusiasm to come back. And then there is certainly a heavy competition from Trade Republic. I don't know how many of you heard of it or have accounts at it. So 3 weeks back, for example, they announced that they will provide 2% interest on the cash that's lying on the account, which I think is pretty inviting for people, because people can, even those who doesn't have any account can just put the money there and wait for it. So I have a feeling that this could be a good pull, and people could take customers from Flatex to them. And then they shared a vision 2026, which would have made sense if they would have grown the same way as 21-22. So right now they have about 2.5 million or about 3 million customers. So they wanted to grow into 8 million customers. I don't think that's possible. Probably they will grow, of course, given that there are lots of slowdown in the economy and stuff like that. But I think it's not possible. But having said all these things, I mean, so it's not only bashing the company, the business itself is cyclical. So overall industry is down as well. So it's nothing specific to Flatex. And then I don't know, I haven't shared the slide, but Flatex actually has shown this clearly that they have one of the most loyal customers, meaning that they could retain, whoever comes in, they could retain about 90% of the customers, and they stay with them. It's a zero debt company, which I have told you, management has a good skin in the game. And I expect that going forward, 2023 could be really difficult. And also I expect moderate growth, given that it's trading at about 1 billion. I mean, it was trading at around like $816 million market cap. I thought it's a good opportunity to add. One more thing I want to share is that yeah, so if you look at them, they actually have an investment thesis. That's why I didn't speak much today, because they kind of given all this, breakdown of each customers, how many employees they have, and and how they moved from one to other. There is one more vision document. Just a minute, give me a moment. Yeah, here, one more. Yeah, so they actually kind of, how they want to go about it. They also give per customer breakage, okay, this is the cyclical, and then they try to improve the average revenue per trade or per customers, as well as so they give how the customers stay with them. That's because of actually the platform is quite intuitive. It's because of that, as well as they provide good service. They also give a good call center in Germany, and they seems to be pretty, I tried it myself, they seems to be pretty knowledgeable, the people in the call center. Also, you see how and they even give a breakdowns, like how each customers could consume, how is the AEM develops and stuff like that. So I found them pretty transparent to some extent, but only thing that I did not like is that they had this BaFin audit started 6 weeks ago, and they only announced to the market once the ended. So this was asked in the con call, and then he said that he did not want to give any half-baked information, so he waited for everything so that he, so that he give the full information. But I would have still expected them to be, this was slightly negative in my opinion, but otherwise I would have expected them to tell the market immediately. Also, when they announced this was exactly coincided with the the collapse of NFT, this what's that called? This
Crypto.
Exactly, crypto brokerage. So market was so pessimistic, so they just killed them 40% because not realizing that it's not nothing wrong with the company to some extent per se. Of course, having said that, we still have to wait for the next like Q4 of 2022 and see what they project, what numbers. Actually, I wanted to end with one more slide, the last one exactly. So this is what they projected, but I think it's not possible to achieve this. So I think they may achieve, they may end up, if the market goes up and doing well, they may end up having half of what's projected. This is what I would actually think. With that, I will take any questions if we have.
Comment or question on the competitiveness, right? You mentioned that there is another competitor called Trade Republic, right? Are they operating only in Germany?
They operate in 11 European countries. They also want to expand. The advantage Degiro has is that, I mean, it's not advantage. I mean, brokerage has no moat per se. Is that they have access to more, they get access to more markets plus. They don't have order flow data. So in Trade Republic, people may be paying less fee, but Trade Republic has a order flow, which means that it could be
they can sell.
Exactly. So the customer may not be getting the right price.
Yeah, true.
And this is in public knowledge, by the way. So.
Yeah, absolutely. And second point is because these guys are a regulated entity because they have some sort of a proxy banking license. So they're far more. It can be either a positive or a negative, right? Positive in the sense the customers would trust them more because they have a banking license as their backup. So that means they have to follow certain regulations enforced by the local regulatory authorities. And also that means they will have an operational overhead to satisfy the compliance need. So I think the benefit and the higher cost gets netted out, don't you think? Because the customers would prefer to stay with the business.
No, but cost is very important. Otherwise, the customers would have stayed with other banks, correct? So.
No, but example, Trade Republic, right? If they keep selling order book data just because they're getting, let's say, cheaper brokerage, but there's a risk of bankruptcy or some sort of a liquidity crisis in apps like Trade Republic, right? Whereas these guys are fully compliant, they have to follow banking regulations and so on. That's what I mean.
So it's true. Actually, I forgot to mention that if there is a liquidity crisis in Philatech, the customers are protected up to 100,000 per person because they deposit the money in the bank, not in the brokerage. But for example, if you compare this with IBKR, it's 20,000 euros, for example. So yes, it does exist. It's true. It is reliable. Also, it's listed company, meaning that you know the company's cash position all the time. What I'm trying to say is that they grew remarkably well, and the only thing is that when they grew remarkably well, they did not realize that they have to put more regulatory in. So BaFin, when they audited, they did not comment anything about the profitability or the cash position or there was no any conflict, except that they just wanted more documentation, more people in intermediary, so that every loan provided, they have a complete follow-up of it. And that's the only, they did not stop them from operating or something. So I had a feeling that they were down too much. I mean, they are at €8 now. I mean, if the market goes down, I would buy them anywhere below. Given that if you can take 10% drawdown, so any buy below 6.5 euros would be great. That's my take on it.
But tell me something. Sorry, Harsh.
Vijay, just on your comment on market making and like setting your order flow to market makers. Nowadays, it's a very common practice. So even brokers like Interactive Brokers, they sell order flow data. So this provides actually a good source of revenues to brokers because this is less cyclical than broking per se. So
Yeah.
it doesn't have a liquidity problem. It actually betters the liquidity of brokers.
It's banned in Netherlands, for example, and then Europe is actually thinking that to bringing out a law to stop brokers from stop sharing the order flow.
Because order flow sharing can be used for front running, right?
It's used for front running. It's just that they position themselves as they provide additional liquidity to their customers.
Okay, got it.
But it is front running. It's just like what they do is they create another independent or another dark exchange where a lot of these market makers would just execute orders which are compiled by Interactive Brokers on their clients. So as a whole, their clients would be losing money. That's why the market makers are kind of buying these order flow data because they're not buying it for not making money. But maybe individual transactions, it becomes more liquid. So like typical market making. And it provides a good source of revenues. But like India doesn't allow order flow trading, but US allows. So it's really regulatory dependent.
So I have a feeling it may be banned in Europe.
Which means companies like FlatEx would have a much better positioning in the market because their business model would be far more stable compared to other discounted operators, right?
It's true, but it has to happen, right?
But I have a slightly different perspective. So if, for example, Europe bans it, but US doesn't, so it provides an advantage to Interactive Brokers because they are making money from market, from these transactions, and then they can subsidize their European operations based on cash flows which are coming from US. So I'm not sure that, because a lot of brokers operate globally, so they can make money in different parts of the world and cross-subsidize trading in other parts of the world to kill competition. That can always happen.
Yeah, you're right. You're right, 100%. Because they want to grow business in Europe also, right? They'll use the cash from US operations and fund it into Europe. Yeah.
Exactly.
But I think they are still the cheapest, the Interactive Brokers.
Yeah, I mean, yeah.
If there are no questions, I stop sharing.